Bitcoin feels quiet today, but the driver is not Bitcoin news. It's liquidity news. Liquidity means cash is easy to get. It's like fuel to markets. When fuel drops, prices can stall fast. Our question is simple. How do you protect your Bitcoin when liquidity tightens? Here's the part most people miss. Bitcoin can move before the data shows trouble. It moves on expectations. This week, policy uncertainty rose. Markets reacted fast to rate headlines. The Fed held rates at 3.5% to 3.55%. Two members still wanted a cut. That split vote adds doubt. Doubt moves bond yields. Bond yields are the interest the government pays the borrower. When yields swing, discount rates swing too. A discount rate is how we price the future today. If the future is priced lower, risk assets can drop. Bitcoin often trades with risk mode, so it can feel shock quickly. Time the US data flow broke. The BEA delayed Q4 GDP and December spending releases. Traders lost the reality check on growth. When data is missing, narratives fill the gap. Narratives can push prices more than facts. In that setting, liquidity talk becomes the main story. Now let's walk the domino chain. The trigger is rate path confusion. The transmission is trigger financial conditions. That means borrowing feels harder. Loans cost more. Credit becomes stricter. The result is a fast repricing. Valuations reset when rates feel less predictable. That can hit Bitcoin with one sharp move. Think of rates as gravity. When gravity rises, jumps get harder. Growth stocks and crypto are big jumpers. Their values sit in the future. Higher rates make that future worth less today. That's why liquidity headlines can hit them first. It's not personal, it's math and positioning. Trigger this week was leadership noise. Fed leadership headlines increased policy uncertainty. When leadership looks unstable, investors demand a higher risk premium. A risk premium is extra return for taking risk. Long duration assets get hit first. Long duration means value arrives far in the future. Why can Bitcoin drop so fast? Because of marginal buyer. The marginal buyer is the last person willing to pay up. In risk-off moments, that buyer steps back. Some traders also use leverage. Leverage is borrowed money to boost returns. When price falls, leverage can force selling. Forced selling can create a cascade. One sell order pushes price down. That triggers stops. Stops are automatic sell orders. Then more selling follows. It's like dominoes on a table. This is why reports flag BTC liquidity sensitivity. It can mean sharp drawdowns in risk-off moves. Let's make this personal. If you invest $200 per month into Bitcoin, a sudden 10% drop hurts. You may want to stop buying, but stopping at fear can lock in bad timing. Instead, use simple rules. Rules protect you when emotions spike. And this week is built for emotion. Rule 1 is position sizing. Do not bet rent money. Rule 2 is reduce leverage first. If liquidity headlines turn negative, cut borrowed exposure. Rule 3 is keep dry powder. Dry powder means spare cash. Cash buys you options. Options matter when markets move faster than stories. Now, what does liquidity tightening look like in real time? It can start with higher yields. It can start with a stronger dollar. A stronger dollar makes global funding tighter. It can show up as a wider credit spreads. Credit spreads are the extra rate risky borrowers pay. When spreads widen, fear is rising. When yields jump, future assets reprice. When the dollar strengthens, global risk can shrink. You do not need to predict perfectly. You just need a dashboard. Your dashboard is simple. Watch yields, the dollar, and spreads. Then watch Bitcoin's reaction. So watch how assets move together. When everything sells at once, liquidity is often the driver. When one sector falls alone, fundamentals matter more. This week, the report says risk assets look more sensitive to liquidity news than fundamentals. This is a warning about timing, not value. Here is a quick checklist for the next headline. First, ask, is the Fed story clearer or messier? Messier means more volatility. Second, ask, are yields rising or falling? Rising usually tightens conditions. Third, ask, is the dollar strengthening? If yes, rise appetite can fade. If those three flash red, trade smaller. If all three flash red, protect first. That can mean less leverage. It can mean tighter risk limits. It can mean waiting. Waiting is a position. Many investors forget that. They feel forced to act. You're not forced. Now we do the asset heat map. We rate the hot cents from this week's news. For the Bitcoin, severity is high. Reason? It reacts to liquidity expectations fast. For the Bitcoin, probability is medium. The reason? The next headline is unknown. For the US growth tech, severity is high and probability is medium for the same reasons. For the gold, severity is medium. It can hedge fear, but rates still matter. Gold probability is medium. It depends on the dollar path. For the short-term cash, severity is low. High rates support cash returns. For the short-term cash, probability is high. The Fed is holding rates for now. Here, heatmap shows risk, not certainty. Now the scenarios. Scenario 1. Inflation cools quickly. Then cuts may arrive sooner than priced. That could loosen liquidity. Bitcoin could rebound sharply. Scenario 2. Inflation stays sticky. Rates stay high longer. Liquidity stays tight and Bitcoin could see deeper drawdowns. Scenario 3. Later data are strong. Risk appetite may rebound, but strong growth can also keep rates high. So, the reaction can be mixed. This is why the data delay matters. It removes the anchor. Without the anchor, markets swing between hope and fear. You must manage that swing. What should a long-term holder do? Keep calm and stay consistent. Consistent means you follow a plan each month. If you dollar cost average, small drops are part of the deal. What you must avoid is panic selling. Panic selling is selling because you feel trapped. Use rules so you do not feel trapped. What should a short-term trader do? Respect volatility. Volatility means big moves in short time. Use smaller position sizes. Set exits before entries. Do not chase pumps. Do not catch falling knives. A falling knife is a fast drop. In liquidity events, drops can be fast. Let's tie this back to the broader system. Tighter conditions can reduce demand for risky assets. Funds rebalance. They sell what's moved up most. They buy what feels safe. That can mean cash and short bonds. It can also mean reducing exposure to long duration bets. Bitcoin can sit in that bucket on bad days. The main driver stays the Fed narrative and the missing US data. Do not overreact to one tweet. Track the chain, trigger, transmission, and the result. If the chain points to trigger liquidity, protect first. If the chain points to easing, you can add risk slowly. Slowly is the key. It's a simple plan you can copy. Keep a core position you can hold. Keep a smaller trading position you can cut. If liquidity headlines turn worse, cut the trading piece first. If conditions improve, rebuild it in steps. This avoids all-in and all-out decisions. For the close, remember this. Bitcoin can be a long-term idea, but it can be a short-term liquidity trade too. Both can be true. The market decides the mode. Your job is to see the mode. This week, the mode is liquidity sensitivity. That's why swings can feel sudden. A common mistake is watching only Bitcoin charts. Charts show the move, not the course. In liquidity weeks, the course lives in bonds and dollars. If you ignore them, every drop feels random. Random moves create stress. Stress creates bad trades. At the dashboard, and the same move feels explainable. The mistake is treating every headline as a trend. Some headlines fade in hours. So use time boxes. Ask, does this change the rate path for months? Or this is just noise? If this is noise, do less. If it changes the path, act for the plan. Plans beat reaction. The final takeaway. Bitcoin often trades on liquidity expectations more than its own story. So watch the signals. Watch yields, the dollar, and spreads. Keep your rules. Keep your time horizon in mind. And stay patient. If you want, I will update this heat map weekly. Just tell me your top assets.